A very important discussion we need to have regarding money and Transnet. Now, Transnet, we know, is continuing to struggle with inefficiencies, and these are costing a lot of money. The state-owned logistics company invited private partner bids to take over rail corridors. The African Rail Industry Association says it's not happening fast enough. They're also questioning the company's commitment to transformation. 16 slots were auctioned off to private players, but only one bidder has been successful, bringing private investment into the rail network. Of course, a key area. We've been talking about this for years. It's a key area for structural reform touted by government as a way to boost investment and job creation, especially in that sector. Well, let's now hear from the African Rail Industry Association CEO. It's Mesela Nhlapo joining us this morning. Mesela, hello to you, and I appreciate your time. First of all, just help me understand and help viewers understand, why is this so very important to be involved in this as well? Because we also got to discuss the revaluations as well. Help me understand why that's so important.
Good morning. I would like to provide a picture so that the viewers will be able to follow the conversation. Transnet material revaluation have increased significantly despite cash flow, operational performance, and maintenance spend. And here we were saying that we need to tread carefully. We need to be cautious of this revaluation. And also, TFR reported 8.95 billion drop in operating cash flow in September. In September again, Transnet revalued the infrastructure, and it increased to a further 7.6 billion. Now, that from the first revaluation to the second revaluation, there's a jump of 41% increase in the value of the infrastructure. And if cash generation and volumes are dropping, and maintenance is being materially deferred, revaluations need to be carefully considered, as future impairments will have dire impact on Transnet gearing ratio. And now our call to action as Aria is that we call all involved to work with Aria and Transnet to save the railway industry, to revitalize our rail industry. This is not about Aria or Transnet, but it's about our economy as a Inc. And we need to save the rail industry as soon as possible.
And we're going to talk about third-party access in a moment, but I just want to just remind viewers the kind of numbers we're talking about. I know you touched on it there, Mesela, but let me just remind viewers. So rail infrastructure, it's gone up 41% in just 18 months. But as you're pointing out, though, it's an 8.95 billion rand drop in operating cash flow. So the books aren't moving in the right direction. So tell me why this third-party access is so very important. What do you hope to get out of that? And then what do you do with that information? Just let's start, first of all, why it's so important for third-party access.
Firstly, third-party access, it's a term that is used to allow private sector to access the core network of Transnet. And most importantly, to move from road to rail some of the freight that are rail friendly. So we need to do that. And why is it important? One, it will reduce the risk or the likelihood of one being killed on the road. Two, it's important for our economy because there will be more rolling stock that will be required. And as industry, we have made an intentional decision that the rolling stock that we can manufacture locally will be manufactured locally, because it doesn't help us to import anything. And that will boost jobs and eradicate poverty and have a better economy and a certainty in terms of policy that will make South Africa friendly to in investment.
Yeah, investment in the rail sector. Mesela, I need to say goodbye to you in a moment. Just in closing, I understand that government, you could essentially look at government as one of Transnet's shareholders. They need to be involved with this as well. What's their involvement currently, and how much more involved should government be in Transnet? Just briefly before I say goodbye to you.
Department of Transport, which has been fantastic in this whole thing, is responsible for policy, and then Transnet reports to DPE, and hence there is no alignment between Transnet and the policy. So the alignment that is required is for Transnet to be a policy taker, not having their own third-party access. So we are appealing to all that are affected, the mining sector, agriculture, automotive, that I'm leading this, we are leading this, get the support that we need to ensure that we save their businesses, for instance, Ford, to make sure that what we have committed as South Africa, we're able to deliver that.
I appreciate your time in making sense of this for us. Mesela Nhlapo joining us this morning. It's a very complicated story, and I think you've broken it down nicely for us. Mesela, thank you very much for your time. As I say goodbye to you again, just to remind you of the staggering numbers we're talking about, because I know we like to throw around billions here in South Africa like they're Smarties, but Transnet have revalued their rail infrastructure by 16.7 billion rand, or 41% in just 18 months. You've got to couple that. This is what you've got to watch out for. The Transnet Freight Rail reporting an 8.95 billion rand drop in operating cash flow. So there's more money going out, or as far as infrastructure revaluation is concerned, and less money coming in. That's the takeaway from that interview. We'll keep our eye on that for you very closely here on ENCA.